What's good, everybody? It's Joe, and I come back at you with another video. So, with this video, we're basically gonna do a recap of the trading day for Tuesday, March 21st. You can see March 21st, there's no news, so nothing for us to worry about besides, the 8:30 hunt and the 9:30 open. Now, granted, I was not able to trade on this day because unfortunately I was still um going through jury duty at the time, like the whole selection process, but they didn't take me for the case. Um, so I was not behind the charts for this, but I still want to showcase the logic so you guys can see that this stuff happens all the time and this phenomenon repeats. So if we begin on the daily time frame, right, once again, want to focus our attention on the daily time frame just so we can have the bigger picture in mind as far as directional bias for the market. So I mentioned in the previous video, when we did the recap for yesterday for Monday. I mean, technically today, I'm recording this on the 25th on Saturday, so obviously this is in the future. But I did a video recording the prior day for Monday, the trading session for Monday. Now, as you can see, price blasted through the all-time high for NAS, and price is still going up and up and up. So obvious that it's still bullish bias. There's no reason for us to change our bias. So we're going in with a bullish mindset. So we're only looking for buys. It doesn't matter what happens with price action. There's never a reason for us to enter a sell because we are bullish on the higher time frame. So basically pretending that the sell button in MetaTrader 4 doesn't exist. We're only looking for buys and that's it. So beginning here, this is the 815 830 candle. So from this point on, we look left to see the obvious liquidity pools on the 15-minute time frame, right? So from this point, we look left. Where's the obvious swing low? Right here. This will serve as our sell side liquidity. And for our buy side liquidity, from here we look left. The most obvious one is here. I'll make it blue, right? But obviously this high just got formed at, the 8 a.m. 8:15. This high is super close to this high, right? So we got two liquidity pools, but this high is also super close to this high, and this high is obviously still intact. So these three highs, like if you look at the values on the right hand side of the three rays, the lowest one is 682 and the highest one is 687 and a half. So they're basically only separated by like 5.5 pips. So honestly, if you wanted to get the low hanging fruit, the easiest target possible, it would be this level here. And if price tackle this level, it's expected that it'll take this one because they're only like 2 pips apart. But obviously they're all super close. So realistically, if you really wanted to, you could just use this high up here, um, because it's a very achievable target because it's super close to the rest. So we have our liquidity pools labeled. Now, you guys remember there's no news, so nothing for us to worry about besides 8:30 and 9:30, which are the two important times, right? 8:30 is when the hunt begins, right? When we can expect liquidity to get taken, and then 9:30 is the stock market open. So because we're bullish, we want sell side liquidity to be taken, and then with the 9:30 open, we want it to push deeper, have it make the lowest low of the session, and then break up to buy side liquidity. So right, boom, here, this was the 8:30 candle, right? The 8:30 candle, the first candle already dives into sell side liquidity. So this is already a this is already a good sign for us because we are bullish, right? So we want to see sell side get taken first. So now because sell side got taken, we could just, fast forwarding it until the 9:30 opens to see what happens at 9:30. So you see price keeps going lower, lower, lower. Now we're getting close to 9:30, right? And price just keeps digging deeper and deeper and deeper, right? So it made a deep push, obviously, into this massive imbalance, which of course is another great sign because we're bullish. So we want imbalance like this to be respected and price to reject off an imbalance like this and head in the opposite direction. Um, is 922. So this is the 929 to 930 candle. So the next candle is the open. Sorry guys. The next candle is the open. So we want the next candle to clear this level here, which it does, right? You see this candle here comes down and clears this low, which is perfect. The 930 candle made the lowest low. So now we want to see a push up, right? So here's a high right here, right? You see a high right here, another high right here, another high right here. So I'll just mark it so you guys can get, right? So a high here, high here, high here. So these are the obvious highs that we would like to get taken if price breaks up. So boom. So as soon as this candle cleared this level, right, then that is a bullish market structure shift to the upside, right? Let me put a trend line right here. So price, some people are asking, does price have to close above it? No, it just has to trade through it. So the second you see how like is a wick now, how previously like it was a full body candle, second price trades through this level, that is technically a market structure shift to be bullish. Now, that doesn't mean we just jump in the trade, right? Because this can happen all the time and then price can go lower. We're still waiting for price to deliver um a fair value gap so then we can take the gap and take it higher, right? So mentally, I already see this and instantly I'm thinking, okay, market structure shift. Now let's see if price will give us a gap so that we can enter from. So there's still no gap, right? Um, so there's still no gap on a 1 minute time frame, right? There's still no gap. And then if you notice here, not only was this high taken, you got the next high. This was also taken. So you got two forms of structure taken. And it's also a good sign that price wants to push higher because if you notice here, look how many black candles compared to the gold candles, right? All these black candles compared to the few gold candles. Now all of a sudden you have one gold, two, three, we have four gold candles back to back, right? Four bullish candles, and then they also took out two market structure points. So skip right to next candle. We see this gets closed, right? So now there's really nothing on the 1 minute time frame. So it's up to you if you want to go 1, 2, 3, 4, 5, or 5, 4, 3, 2, 1, right? We could just do 1 minute, 2 minute, right? So if you notice here, we do see a gap here. So the reason why this is important is because based on our strategy, the fair value gap has to be inside of the market structure shift range. In this case, right, this fair value gap is not within this market structure range from like this high to this low, right? And I'll do it like this so you guys can see this range. Right now I'll mark this pink. Right, so obviously this is the displacement high and displacement low, right? Obviously this fair value gap is not within this range. So we even though this was the first market structure break to happen, price can also break multiple structure points. So in this case, right, the next I guess highest displacement high to displacement low is this structure point right here, this swing high right here. So from this high to this low, right, you clearly see that there is a gap that was left within this range. So um, from here, because that's the only gap that we see, we'll stay on the 2 minute time frame, right? Here is the next candle. The next candle form is another bullish candle, which is another great sign that price most likely wants to move higher. So once you see this, that should be your cue for an entry. So entry would be here at the fair value gap, stop loss all at the bottom. That's how I personally trade it, just to be safe. And then, to take profit would be all the way at this high here. Right, so you essentially just want to be on the same time frame. Like, for example, on this 2 minute time frame, you want structure to be broken somewhere, and you want the gap to also be there, right? You want all the confirmations to fit with what you're looking to do. So this is what I'll be looking for as an entry. This is a 1 to 279 risk reward. Um, Now this is generally a smaller gap compared to like other entries that we've seen before. So in a case like this, if you wanted to do like half risk, like say you risk 2% of trade, if you wanted to risk 1%, that's perfectly fine. Because a lot of times when we trade, usually a fair value gap would be like an aggressive gap, like something like significantly bigger, right? So because it's on the smaller side, it's probably not as strong as like the candles that left way bigger gaps, but nonetheless, this still fits your confirmation for a trade entry. So at this point, what I would do, I would also take a fib, mark the high, like the liquidity high to the liquidity low, and also see where 50% is, because you want to be able to take money or to take partials, at certain points, right? Like this high here is almost at the 50% mark. There's an imbalance here at the premium 50%. There's also a high here. So you can find different places to take partials um, as you go along the way. Right? We're not using a fib to like determine the entry. We're just using a fib to determine premium versus discount to see where we can, you know, take partials off, right? Because this is liquidity here. This is an imbalance right here, right? These are all mark these like purple or something, right? These are all targets that you can use. Even this high here, another imbalance, right? These are all targets you can use to take off partials. So now we continue, right? Then we would be tapped in to the trade at 9:38, tapped in, and then we basically wait for it to play out. So you want to practice a little patience. You don't want to just move your trade to break even right away. For me, I like to, wait at least for, if we're bullish, I want to see a structure break on the 5 minute time frame before I move my stop loss to break even. So if we go on the 5 minute time frame, right, we see a clear high right here, clear high right here. So I want to see that get cleared, right, like price trade through it before I move my stop loss to break even. So what happens next? Right, so price obviously comes really close to your stop loss, and I'll just mark it here. Right, price came close, but clearly it didn't touch our stop loss. Um, now it's did like one more dig deeper, and then now we starting to see a push higher. So the second this candle came up and cleared this high, if you wanted to, you could move your stop loss to break even. Some people, if you guys want to let the trade breathe a little more, then that's perfectly acceptable too. But for me, I would move my stop loss to break even on this candle because that's just what my strategy is, right? So, and you can also take a partial up here. If you wanted to, you could take like a small partial 20% so that you walk away with something, right? Even if this was a small risk reward, I think when I checked it, it was probably um like a 0.50 or something. Even if you took out 20% of the position, you still made money and you're break even, so you're risk free. So worst case scenario, you still walk away having made money. So that's why partials are so powerful, because even if the trade goes against you, you walked away with something. So it wasn't a wasted day. You still got paid, right? And you hit an easy target. So then, as you can see, price is getting close, but it doesn't tap it. It didn't tap it again, right? Like, and will move it to like actual break even. I wouldn't like put it above here. Like I would, just protect the position. So price gets close again. see how it finally starts moving through. So it's very possible that you could have been taken out of break even if you decided to move your stop loss a little bit past break even. You could have been taken out because of spread. Like it all depends on your broker. Um, but you know, so let me take the fib tool out again. All right, so we have liquidity here, a bunch of fair value gaps, right? You got one here, you got another one here. Right, so these are all locations where you could take partials at. Um, right? Obviously you have a high right here, so you can take partials there. Um, so I just figured to show you guys that. And then if we just let price play on, right, it eventually smokes the final target. So the trade I think was like one to probably almost a 1 to 3, right? If I'm not mistaken. Let me just double check. Yeah, so 1 to 279 total. But obviously we took some partials here, partials here, partials here, and then final target. Just say you could have had a 1 to 2 um winning day, but that's obviously still success, right? Like you're growing your account, you're making money. So had I seen this, I would have taken the trade. But obviously I wasn't behind the computer when this happened, but I figured to go do this with you guys so you guys can see that these setups happen all the time. That was a breakdown for the trading day for May 21st. So hopefully if you, you know, hopefully if you are using the same strategy as I am, you'll find this to be useful. Hopefully if you're looking for a strategy, I highly encourage you to adopt this one because this one is extremely powerful. Um, and it just makes a lot of sense as far as like how price operates and what price is actually doing, right? Like you basically develop an understanding for price and its habits. So that was the breakdown for you there.